Global financial markets have started the month on the back foot as the escalating conflict in the Middle East fuels sharp moves in oil, gold, and emerging market currencies. Brent crude prices surged past $78 a barrel by midday after shipping through the Strait of Hormuz slowed dramatically. It is a vital corridor that carries roughly a fifth of the world's oil supply.
There is a lot of uncertainty. Does this persist and now expand into complete disruption in the region, particularly around the Strait of Hormuz, in which it's a key supply route for the global oil supply? South Africa doesn't buy much oil from there, but obviously global prices will get squeezed and will be affected by that. Oil already up around 10% over the weekend. So there's a lot of knock-on factors that could play out. And it's really about assessing, is it short term or is it longer term? And if it's longer term, there's a lot more risk that still unfolds as a result of that.
Meanwhile, gold is climbing back towards $5,400 an ounce on safe haven demand. Nader explains that the rand and other emerging market currencies are under pressure as the market assesses how this plays out.
Short term, the spike, the markets tend to overlook it. You get a little bit of a knee-jerk reaction and a rush to safety of the dollar. The rand is weakened, and if we think of South Africa, the rand is weakened about 1.5%. Oil's up 10%. We're entirely dependent on the rand oil price for our petrol price setting, for our energy prices, and that feeds through into the broader economy. If we see oil kick on from 80 to closer to 100, in other words, if there's a sustained disruption of the oil supply in the Middle East, the entire outlook changes for South Africa. The rate cuts very much off the table. The inflation target of 3%, that goes off the table. And what is the feed through into the prospects for growth? Consumer is now under more pressure, so that would hurt the retailers, would hurt some of the financials. So these are the things that we have to take into account.
Nader says with oil at around $80 a barrel, the move is likely to translate into petrol price increases in next month's adjustment, adding pressure to South African consumers. Nosipho Khatebe, SABC News, Johannesburg.